Stock market's in turmoil as we see this week. We've had 3% rise, we've had a 3% fall, and we've had a 5% fall in the Nasdaq. Certainly the markets are concerned about the future of the world economy. The real concern is stagflation. What's stagflation? Well, we have a situation in the world where you've got inflation, but the economy is stagnant. What that means is that governments struggle to raise interest rates. So think, when you've got inflation, governments want to raise interest rates to slow down the economy and get rid of inflation. But if you have stagflation, then governments can't raise interest rates. The economies are stagnant, but you've still got inflation. What happens is that governments are running out of tools to manage the economy. That's the worry for the markets. You've had that worry seem to go away, and people say, well, actually interest rates are not going to rise as much as expected, when the Fed raised interest rates by 0.5 instead of by 0.75. That raised optimism, but then as the people started to think it through, they realized that actually the Fed can't raise interest rates as much as they should do, just simply because the economy's not growing as fast. Is it all doom and gloom? Well, no, it's not. There's opportunities in the market, but let's again look a little bit further at what's going on briefly so that you understand what's happening in the world economy. What we've got inflation around 8% and perhaps going to increase. But think about part of that inflation is oil prices, it's energy prices, and it's caused by lockdowns in China, caused by COVID lockdown. And that of course means that factories have stopped, there's supply chain problems. Of course, those problems can go away, and if they start to depreciate, then of course that releases the pressure on the economy, and you'd actually get a reversal. For example, two companies that I'm going to mention here, Nike and Starbucks, their shares are lower because people in China aren't buying. If COVID goes away, or they start to unlock the economy, stop the lockdowns, then guess what? Those shares will bounce back. I'm just giving those as an example, but we're looking at a world market, and there are other stock in exactly the same situation. Of course, if there is a recession and if there is stagflation, where should you be investing? Well, then again, you'd be looking for stock, and that's what fund managers do, financial advisors, that grow whatever is happening in the world. Let me explain that differently, perhaps bad for me, but if you imagine that people, when there's a recession, don't get their haircut done as much as often. Okay, what do I mean? If money's tight, there are certain things that you delay. Instead of getting your haircut done after 4 weeks, you get it done after 5 weeks or 6 weeks. Okay, do people advertise on Facebook? Well, companies, when there's a recession, they tend to put out less adverts. So what we're saying is that companies which are needed, pharmaceuticals as an example, or perhaps companies in the food industry, and yesterday we saw Kellogg's stock, despite a sell-off in the market, go up. Okay, why? It's in an industry, people are going to keep buying their Kellogg's, going to keep doing it regardless. Okay, and that's what a good fund manager does. They invest in companies that are going to keep going regardless. In fact, the Kellogg's figures were actually very good yesterday. Their stock went up, market went down 5%. Okay, so having a fund manager that can be selective, put your money in the right place, that's what makes a difference. If you're a businessman, what should you be looking at? Okay, if you're a businessman, you need to be looking at where are the trends, what things are going to happen. Right now, we've got people working less hours. It was the biggest drop yesterday since the Second World War in America on number of hours that people actually worked. There's a 7.5% first quarter drop in hours worked, and yet wages increased. So if you're a businessman, you've got to look at where your costs are. You've got to look at things that potentially you can reduce the costs on. Because if we are in an economy that's stagnant with inflation, then you've got to know where are your costs, what things can you do. Okay, if you're an individual saying, okay, inflation's here, but my wages haven't gone up. Okay, well, the company may be squeezed, so that may be the case. You may need to look at having a second income. Lots of things things that you can do to do that, for obviously in today's world, including in the financial services industry, which you're welcome to message me about. There's many things that you can do. Okay, but what we've got is, think about it this way: the inflation is there, economy is going to get squeezed. Okay, we've got a period where we get through it as quickly as we can from a world economy point of view and get to the other side. Doesn't mean you should be selling stock. Why not? Because already the price is down. So think about it this way: nobody can time the market. Okay, there literally isn't anyone. You're talking about Warren Buffett, most famous, most successful investor, doesn't try and time the market. Okay, reality is you can't time it. You're buying quality stock, and that's what Fund Manager does, and then holding it for a period of time. So don't panic. Make sure that you're up to date with the information. Obviously, subscribe to my YouTube channel, hit like, share the video. I'll put out the information on what's happening, where you should invest if you're choosing to do so, what's happening in the economy, and if you're a businessman, what you should be doing about it. Thanks for watching the video. Please like, please share the video.